Welcome to a special edition of Hot Trades of the Day. Today, we're going to have a special that exclusively focuses on SMCI after yesterday's mini crash. So, we're going to look at SMCI from all angles: business, sentiment, how the institution think about the stock right now, the charts, the valuation, and obviously what we should do right now with this stock, this former darling of the stock market. So let's get right into it. I'm wearing black. Does that mean it's funeral time for SMCI? We'll talk about it right now. My name is Daniel Welmy, head of trading here at Bull Markets Lifestyle, and I'm looking forward to guide you through this special about SMCI, and let's jump right into it. The stock crashed yesterday. It cratered about 19% at the low point, and it closed out down about minus 12% after the Wall Street Journal, so very reputable source, reported that the DOJ, the Department of Justice, is in early stages of an investigation against SMCI. So, what does that mean? That's what we're going to talk about for the stock and for the future. And here's the deal. Without knowing you personally, I know why 80% of you guys are here and what you want to hear. You want to hear Hindenburg is wrong, F the shorts, business is going to boom, SMCI is right, all the growth projections that they talked about will become true. The products are amazing, and the stock is going to go to 3K, 4K pre-split, like some 20-year-old influencer on the internet told you about. Well, then this video is not for you, because what we're talking about here is what's really happening. We're talking about the few facts that we know, and we're going to talk about what this means. Because I have no positions in SMCI, long or short. I couldn't care less. I have no emotional attachment to the company or the stock. All I care about is what's the current situation and how can I help you guys navigate this situation. Because I have seen this before. Not with the SMCI, but with other companies, very similar. So let's jump right into it and start with the business. And I tell you something that you don't want to hear, but that's the honest truth. I don't know about the business. And here's the thing. Almost nobody knows. Because we can't trust the numbers anymore that SMCI has given out, be it past performance or future projections. Maybe with the exception of some AI tech guys that really know the SMCI products in and out, nobody at this point knows if these products are really that valuable, that necessary, who could substitute them, how could they be replaced, if the demand is really there. We don't know because we cannot trust anymore what the SMCI management said. Okay? The fact that we do know is that SMCI had to pay a fine of $17.5 million to the SEC in the past for, let's call it, creative accounting. Okay, that prematurely recorded revenues and the understated costs. That is a fact. So there is a precedent for the rumors that are going around right now, starting with Hindenburg Research and now the Wall Street Journal reporting the potential DOJ investigation. But the business is not the important part in this situation. It's the sentiment. How do investors, and especially institutional investors, see the stock right now? Right? I told you in the last videos about SMCI, the sentiment is what's really important now when it comes to SMCI. And the sentiment has completely shifted, and nothing shows this better than the stock price, right? We had the golden times, Q1, January, February. But look at the stock since then. And fact is, because of the allegations, okay, right now, and this is really, really important to understand, because of the allegations, because of this new black box that we have, this is not the same company anymore in September, October than it was in January, February. So whatever you thought about SMCI in the past, whatever you heard about SMCI in the past, you can basically throw all that out of the window. This is a different company. Forget the past. And what really helps is an exercise. And ask yourself this: if you would remove the name supermicrocomputers from this chart and from the current situation meaning the accusations of accounting fraud, and there are reports from a very reputable source about a potential DOJ investigation, that the DOJ is in the early stages to conduct information about a potential investigation. Would you invest in this stock? Looking at this chart and with these facts that we know without the name, ask yourself, what would you do? We know what the answer is. You don't want to hear it, but the answer is no, you wouldn't invest in this stock right now. You wouldn't hold this stock right now. Okay? And it's the right answer. So in January, February, and let's say even into March, even though as you can see here in March it was already forming the right shoulder of the head and shoulders formation, which signaled the decline of the SMCI stock. And yes, I was short SMCI at around 1,000, but I'm also the first one to tell you I closed it out around 780, I think 750. So I haven't been in SMCI since. At this time, first quarter 2024, you needed to have SMCI in your portfolio if you were an institution, and if you're a retail investor, obviously you wanted to have it for sure because it was going to the moon. At least that's what the 20-year-old influencers were telling you. But now we have a different situation. You don't need to have, if you're an institution, you don't need to have SMCI in your portfolio. Actually, the opposite is true. You don't want to have SMCI in your portfolio. And instead of, you can miss out on SMCI, you can buy NVIDIA if you want, right? This is how the institutions think, right? They don't want this stock in their portfolio at year's end when they need to show to their clients who they invested in. Nobody wants to show their portfolio and the clients say, well, wait, you invest in SMCI with all the allegations going on? Why are we doing this? No, they want to see you invested in NVIDIA, in AMD, in Dell for the infrastructure, right? So the institutions are selling because they have no emotional attachment to super microcomputers. And this is what breaks the neck of the retail investors. The retail investors are emotionally attached. They still think about SMCI like it was in the first quarter this year. Stop doing this. That was a different company. This is not the company that we have anymore right now. The institutions, the institutional investors, they know this. They are selling. They do not care. They don't need to buy SMCI right now because it's not hot anymore. It's not a must-have anymore. It's the opposite. You don't want to have it on Wall Street, right? They need to be invested in the chip sector and in AI, obviously, but they can do that through NVIDIA, through AMD, Dell, Oracle, you name it. So this leads us to the chart. This is the daily chart. And what can we say? It looks bad. I told you in the last video I was concerned that the stock regained the uptrend but didn't have a strong bounce, and it was weak. And you can look it up on the video and you'll see that's what I told you. And I told you That's dangerous. That's a warning sign. It's probably going to go lower. And this is what's happening now. Now, what we're looking at, where will the stock go? I've told you this before in the past videos. The zone would be this blue line, which is the breakout line. It would be a retest to the scene of the crime, because as you can see here, this is when we broke out and this is when the majority of the rally started. However, this is important to understand. The retest to the scene of the crime is only a valid chart signal if we find the bottom here, if we're talking about the same company, right? So if the fraud allegations prove to be true, then we're talking about a different company, and then this stock can go significantly lower than around 350. Now, the chart itself looks problematic on a daily basis. We got some structural damage done. Now, we haven't confirmed the break below the uptrend yet, but it doesn't look good. Now, let's go to the weekly. This doesn't look good, right? So we got another breakdown, the second breakdown of the uptrend in 4 weeks. We were not able to build any strength after regaining and confirming right here the uptrend. That's really bad. We're almost at the end of the week. It's unlikely that SMCI will regain the uptrend today. So that would mean that we're probably going to get a confirmation if SMCI closes today a little weaker than it did yesterday. Significant long-term structural damage. Gets even worse if we look at the monthly. This is the monthly chart. Look at this. We're almost at the end of the month, 2 more trading days left. Unlikely that we're going to see a major up move. And on the monthly, we've broken the uptrend. So these are strong structural damages in the stock. Does this lead us to want to invest in SMCI? Ask yourself. The answer is no. Now, there's a difference between not investing and shorting. Okay, so we can do 3 things. We can buy a stock long, we can short it by shorting it or through options, or we can't do anything by not being invested in it. At this point, the shorting opportunities, the ideal shorting opportunities, were here when the head and shoulders was confirmed. Maybe here when it confirmed, that was actually a really good shorting opportunity. When it confirmed the downtrend, and then it went down, and then obviously we had the Hindenburg thing that nobody knew was coming. But this downward move right here, that was possible to see coming. So those were the good ideal shorting opportunities. Right here at around 400, to short it to go down to 350, that's not a good shorting opportunity anymore, because if the DOJ comes out and says, we're not doing an investigation, this stock can easily jump 20%. So you have like a 10, 12.5% potential for a short, but easy like a 20% risk on the if it jumps up. That's not worth it. So to me right now, this is just a I want to stay away type of stock. And this is what the chart tells me too, because the chart is broken. Yes, fundamentally, let's talk about the fundamentals. The stock is dirt cheap. PE ratio of 12 for this year drops down to 9 next year. Those are China stock valuations for an American chip company. But this is only true if the predictions of the analysts are accurate, and those are based on the numbers that SMCI has given in the past and predicted for the future. So basically, you can throw all the valuation arguments out the window because they're based on a black box that we don't know about. So ask yourself, why would you own SMCI? There are really two reasons for it. The first one we already talked about is you want to own it because it's the hot chip company, but that story is over. The second reason is you want to be invested in the chip sector and AI, and that makes complete sense, and you should be. But now there are other options, better because they don't have the black box attached to it. So next week we'll make things even more tricky because we have the stock split on October 1st, 10-1, which will throw off probably some retail investors that will jump in the stock and buy it. I can see that happening short term because unfortunately that's how this always goes, and the retail investors usually are the people that are losing out in the end, and that's why these stock splits are happening in the first place. But this doesn't change anything fundamentally, as we know, about the valuations of the company and the fundamental things that are going on with now the possible DOJ investigation. But again, most important, the sentiment about SMCI, it's shifted, it's broken. This is right now a stay away company for a lot of institutions, and likely what I think is going to happen is that SMCI is going to be removed from the S&P 500. Remember, it came in, it was added to the S&P 500 on March 18th. What a timing, right, by these people. We're talking right here. This is where they added it to the S&P 500. Great job right there. Almost hitting the top. Terrible. So I expect SMCI to be removed from the S&P 500 because after all the losses, it's just too small of a company now. But that means that the passive investment funds need to sell the super micro stock. So that would put additional pressure on the stock. Yeah, that's where we stand right now. It's not great. If you held all the way down, I'm really sorry. I made the same mistake back in the day as well. If you bought recently, you definitely want to work with tight stops. I would not want to short the stock here, but I sure wouldn't want to buy it either.